Hey guys, how's it going? Value Venture Investing here today. So today we're going to be talking about Apple's fourth quarter of 2020, the last quarter. Earnings just came out. I just listened to the conference call, and I think the market's kind of misunderstanding the earnings. Taking a look at the stock here, as of recording this, it's down over 5%, so getting hit pretty hard. It's been hit, it's been hit a little hard here lately, but then keep in mind the run-up that we've seen since last earnings, and those were just an amazing surprise earnings. If you want to do more comparison to those earnings, check my channel. I did a video on that one as well. So the top line numbers here, we will get into why things are the way that they are, but the revenue was $64.7 billion, and that was an all-time record. And the Apple was saying that's over. I'd have to look back and check. An all-time record by $1 billion. So these numbers they're really kind of hard to fathom. It's like Apple always says all-time records, but I mean, this is by $1 billion. How many companies would be, just would give anything just to have $1 billion? So anyway, the estimate was $63.7 billion, so that was a beat. Earnings per share were 73 cents versus 69. That was a beat as well, and we saw another all-time record there. Keep in mind, though, they are buying back shares. Earnings were strong, with the couple mentions of things that weren't. I will talk about those, but all-time record there as well. Cash was $192 billion. Last quarter was $194 billion. So roughly it's down about $2 billion in cash, but you gotta keep in mind what they're doing. They're really pushing out their services, and we're gonna talk about those in a little bit. There's a lot of capital intensive things that they're involved in. And again, Apple, because they had so much cash, I believe at one point they had like $270 billion in cash. They're trying to become net cash neutral. You don't want to be sitting on cash. You want to be, using it to grow the company. So in terms of each of the product categories, this is, I think, where market's taken it quite negatively. Again, if you watch many of my videos, guys, it's been going on for a long time. Apple's trying to transition more into a services company. Of course, they want to sell as many iPhones as they can, but it's been a trend for quite some time, so it's kind of weird to see the stock pulling back because the iPhone revenue itself is down. Because overall the company is growing as a whole. But it was $26.44 billion. Estimates were about 27.99, so that was the miss. And that was the miss right there that I think is driving the stock down. That and their guidance, which I'll get into a little later in the video. But every other category was phenomenal, and I've been saying this the whole time. I mean, it doesn't matter if you see a little bit of weakness in iPhones as long as you're keeping your installed base, which I'll talk about later as well. Obviously, not the best. You always want to be growing, but keep in mind there's a lot of different things with this. One of the biggest reasons that we saw that is they were late. I mean, it wasn't until a couple weeks ago here that they released new iPhones. People were waiting for those. This quarter, a lot of people, including myself, I'm buying a new iPhone, were waiting, and this isn't even on this quarter that we're talking about, right? So they had, because of all the stuff going on in the world, they had to wait. And of course, so that negatively impacted revenue. So perhaps analysts were not taking that into account, but still, even though they had no new product category in this quarter, that's still pretty strong. These are what's amazing. iPad was $6.8 billion. That's up 46%. And I feel like I'm saying this every quarter, things are up double digits strongly, quarter after quarter. Mac was $9 billion. That's up 29% year over year. And this is hardware stuff. Keep in mind, this is hardware stuff. This is not even their services. Their services was $14.55 billion, up 16% year over year. Just growing like crazy, and the gross margins on those services are unreal. Wearables, home, and accessories was $7.88 billion. I didn't write how much it was up there, but we'll look into their financials in a little bit here, and we'll be able to take a look. So this one is growing phenomenally. I mean, as we've talked about time and time again here. Gross margins were 38.2%. So those are slightly better. These are up 20 basis points. And services was a part of it. And that's what I keep saying. I mean, you want to lock people in the iPhones, but you want to get them into the services that are higher gross margin. And that should in itself give the company a higher valuation. We have seen it, come significantly higher. Before I go into the financials here, I'll just talk a couple other things here. It was nice to see the whole year revenue, I expect next year maybe to see 300, but $274.5 billion for the year in revenue. That's up 6% year over year. So total growth of the company is up 6%. People that were saying before, the law of large numbers, the whole company's up 6%. And look at the nasty year that we had. So keep that in mind. Again, active install base is at all-time high, and you want that high install base for the services. And again, that's something that doesn't seem to change. They say that every quarter. So, I mean, that's great. I mean, if that was going down, you might be concerned. Another big thing that I think is probably affecting the stock right now, there was no guidance. And that was the big thing that came out in the news, and so then the stock went down. But when I listened to the conference call, they did get a little bit more transparency there. They're saying they expect the iPhone to grow in December, even though it was released late. So that shows you the demand, and Tim Cook kept saying how bullish he is going forward. He kept repeating that over and over again. So even though it was late, he expects growth. I don't believe he said how much, because they're a little uncertain. There's obviously a lot of uncertainty going forward, but all other products and services, double-digit growth, after we've already seen double-digit growth. So this is my point of how fast they're growing. So they won't give exact numbers, but that's huge, right? He also said a few more exciting things coming this year, and he's probably talking about Apple Silicon. If you don't know too much about this, I'm a bit of a geek with this, but it's Apple's own, instead of Intel chips, it's their own custom silicon. And in terms of what it can do for the personal computer industry, the Macs, it's going to be unreal. If you talk to anybody that knows anything about computers, look at the performance of the iPhone, look at the performance of the iPad. I mean, when the iPad came out, it was blowing the doors off of 95% of notebooks that are shipped, and it was an iPad with no cooling. Can you imagine what they're going to do in a computer? So this is going to be huge. It's going to be interesting to see how this transforms the whole industry, but we have to wait to see what product they release at the end of the year. So right now, let's take a look at their financial statements. So taking a look at their income statement here, of course, this is on a year-over-year basis. This is probably what spooked investors. Products categories was down in terms of revenue, slightly. Well, I guess it was a little more than slightly, over $1 billion here, but then that was made up by services. You've seen the growth. Look at that massive growth in services, 12.5 billion a year ago versus 14.5 billion. So that gave the total net sales actually higher, and that's the mix change that I'm talking about. And that's been going on for quite some time. So if you believe that iPhone is the end-all be-all and you only don't care about higher margin businesses, and you think that the stock's going to fall at a cheap multiple that's at right now, then I guess you should probably be negative on the company. In terms of why we actually saw not as strong growth, the cost of sales. Okay, we saw the cost of the products actually go slightly down, but we saw a pretty significant increase in the cost of sales for the services from $4.4 billion to $4.8 billion. So of course that increased their total cost of sales, and their gross margin was 24.3 a year ago versus 24.6 this year. Another thing that kind of harmed them in terms of their EPS and their actual earnings, and this isn't necessarily a bad thing, other companies seem to get praised for it. Their operating expenses were a little bit higher, significantly. I mean, we're looking at $900 million or more, roughly, just looking at here, research and development. But I mean, as you're going to develop more stuff, you need that R&D for an extremely profitable company, and of course that affected earnings a little bit. Of course, selling general administration increased as well, but that's to be expected when you're growing, when you're making more expenses, and you probably have more employees and stuff like that, right? So the total expenses were significantly higher, 9.9 billion versus 8.6 billion dollars a year ago. So looking at the bottom line here, net income was a 12.6 billion versus 13.6. So that's probably what people are looking at it. But I mean, if you want, guys, pause the screen and you can see what I'm saying. We're shifting more into products and services, and we're having higher costs associated with that, as well as a little bit weakened demand in the iPhones due to timing. So that's why you're going to see this drop. But when you look at the whole picture, it's, looking at these financials, that's why I do these videos for you guys. It's interesting to see why, rather than just looking at the numbers, right? So the earnings per share, I'll look at diluted here, was 73 cents, and it was so versus 76 cents a year ago. And of course, that's due to the cost structure that we just talked about. So now another interesting thing here, we're going to look at net sales by reportable segment. So we're going to see the revenue generated in each geographic area. The interesting thing to note here is that I believe, yes, every single geographic segment was up. Americas was up, over $1 billion. Well, actually, yeah, over $1 billion there. Europe was up significantly, 14.9 versus 16.9. Japan was up. That was a pretty big jump onto Japan, and the rest of the Asia Pacific as well. But we saw quite a hammering still in the greater China, and that's been a concern for quite some time. So I think that's something that spooked investors. So it was 11.1 billion a year ago versus 7.9 billion this quarter. But keep in mind everything that occurred and the fact that 5G is huge in China, and as of this quarter there still was no 5G, and that is what Apple has. So that's going to be a super cycle grower in China, because China just has the infrastructure. They have that, and Chinese people, generally speaking, I'm not going to generalize here, are very tech savvy, and they want the fastest speed. They want the greatest technology, right? So, but still, even though we saw that decrease in China, net sales increased from 64 billion to 64.7 billion roughly. So as a whole, even with that, we're still seeing growth, and we're going to see China grow, in my opinion, as well. Net sales by category, so this shows you the revenue per product category rather than the geographic segment. Of course, like I said here, we saw that drop in iPhone revenue. So I hadn't written on the board here actually, but it was $33.3 billion a year ago versus 26 billion. So quite a huge, significant drop there, right? So I think that's what's concerning investors. And the question you got to ask yourself is how much of that is to do with timing? How much is that to do with the crisis that we have going on right now? All that kind of stuff. But again, like I said, in my own opinion, that's something that I expected to happen, because you're going to see the growth in the other areas, and you are seeing actually even blowing my expectations out of the water. Looking at Mac, 6.9 billion last quarter versus $9 billion this quarter. That's insane. I would never expect that I would see Mac growing at that level. Same thing with iPad. I mean, I love my iPad, but wow, 4.6 billion a year ago versus 6.7 billion. And like I said, one of the fastest growing two segments, wearables and services. Wearables was up massively, and services, look at that growth year over year, 12.5 billion versus 14.5 billion. So unreal growth in everything except for the iPhone. Taking a look at their balance sheet here, I'm going to put it on the screen here, but there's nothing really too interesting. Again, like I said, you can see their cash position, and keep in mind marketable securities, short-term marketable securities, and non-current marketable securities increased in there as well. Interesting to see that there's a slight uptick. I don't know if this means anything, but in their short-term marketable securities, meaning maybe that they think that this is a good time to buy in terms of the broader markets, but actually a little pullback in terms of their long-term marketable securities. But again, nothing really too concerning or interesting here whatsoever. Taking a look at how they generate cash, how they utilize cash, and how they invest cash here, statement of cash flows. Looking at cash generated by operating activities. Again, to see the behemoth that they are in terms of cash generation, the cash generated by operating activities was over $80 billion this year. And keep in mind, this is for 12 months ended, so they're giving it for the year. And that's versus $69 billion a year ago. So operating cash flow is just going through the roof, and that's one of my favorite things to look at. Over the year, you can kind of see that, in my opinion, maybe they felt the same thing, that securities, when we saw this drop this year, were an awesome purchase. Purchases of marketable securities just blew out of the water what they did last year. Over $114 billion they purchased this year, and they did only $39 billion last year. As a result, their proceeds from marketable securities was up to $69.9 billion versus $40 billion a year ago. But interestingly enough here, the proceeds from sales of marketable securities, meaning what they decided to sell, was actually down. So that, to me, I haven't done too much analysis on that, tells me that they think that stocks are still a good value, and that they're not actually selling a lot. They purchase a lot through the year, but they're not selling a lot. And personally, I think that that's a really, really good strategy right now in terms of long-term mindset. Of course, Apple has always had a very long-term mindset. Dividends here, we know that they pay out a massive amount of dividends. Payments of dividends and dividends equivalent was over $14 billion. It was actually slightly down from last year, but you also got to keep in mind that they're buying back shares. Repurchases of common shares, again, was up to $72 billion this year versus $66 billion last year. So we actually saw a decrease in cash, and like I said, they're going into new areas. Apple TV Plus, they have a new one, I believe it's called, oh gosh, I should actually know this is with their health and their bundled services. Apple Plus something, I can't quite remember. So they're spending, so they're doing something great. They're not just sitting on their cash like they used to do so much, and they used to be a little bit more, criticized for that. They are actually utilizing their cash and making moves, and we'll see how that affects them going forward. So overall, I think it was a fantastic quarter. Of course, I'm a bit biased at my huge position that I have in Apple. The one sore spot being the iPhone. Again, we can expect that. But what we're going to have to see is going forward how these new iPhones, and these new iPhones are actually, a lot of people think a lot hasn't changed, but they are pretty incredible. And for those who care about 5G, that's there now. So I expect them to do actually extremely well. So going over the holiday quarter, that's what's going to be the key. And we're going to still see, even by Apple's own admission, these things growing as well. I'm going to see what they're going to be doing with their Silicon Max, maybe any other products that they have that they haven't talked about. So overall, great quarter. I think with all the uncertainty with this crisis going on, we're seeing cases rise again. That's weighing on things as well right now. So, it's going to be an interesting time for the next couple weeks, months, maybe even longer. But I'd love to know what you guys think. Specifically, do you agree or disagree with me with this iPhone revenue? And iPhone, obviously, they don't give unit sales anymore, but the units are probably going down because their ASPs are about the same. That dropping, do you think that's a big deal, or do you think they're doing the right thing to focus on all their other higher margin businesses and their strategy? So would love to know what you guys think. Leave a comment down below. Don't forget to like and subscribe, guys. It really helps the channel. And I will see you guys in the next one.